This is a demonstration of exercise 523, journalizing sales transactions, and we are asked to journalize the following sales transactions for Antique Mall. Explanations are not required, and the company estimates sales returns at the end of each month. The first transaction on January 4th states that we sold $16,000 of antiques on account with credit terms of N30 to Cavelli Designs, and the cost of goods is $8,000. So to record this transaction, we first would record the sale by debiting accounts receivable Cavelli Designs for $16,000 and crediting sales revenue for the same amount. We also need to record the cost of goods sold, which the problem gave us as $8,000. So debit cost of goods sold for $8,000 and credit merchandise inventory for the same amount. On January the 8th, we received a $300 sales return on damaged goods from Cavelli Designs, and the cost of goods damaged is $150. So first we will record a debit to refunds payable for $300, and we would credit accounts receivable Cavelli Designs for the same amount. Then we would record the merchandise inventory that we received back, which was the cost was $150, by debiting merchandise inventory for $150 and crediting estimated returns inventory for the same amount. Then on the 13th, Antique Mall received payment from Cavelli Designs on the amount due from January 4th less the return. So originally they had purchased $16,000, but they returned $300, so the debit to cash would be $15,700, and then we would credit accounts receivable Cavelli Designs for the same amount. Then on the 20th, we sold $4,900 of antiques on account with credit terms of $110, net $45, FOB destination to White Furniture, and the cost of goods is $2,450. So we would record the debit to accounts receivable to White Furniture net of the discount. So to calculate the discount, we take the amount of the invoice, $4,900, times the discount, 1%, and we get $49. We subtract that from the invoice amount, and we get $4,851, and we would debit accounts receivable for that amount and credit sales revenue for $4,851. We also need to record the cost of goods sold. We were given in the problem that cost of goods is $2,450, so debit cost of goods sold for that amount and credit merchandise inventory for the same amount. Next, it states on the 20th that Antique Mall paid $70 on freight out to White Furniture. So freight out is a delivery expense, so we would debit delivery expense for $70 and we would credit cash for the same amount. And then on the 29th, we received payment from White Furniture on the amount due from January 20th, less the discount. So we would debit cash for $4,851, and we would credit accounts receivable White Furniture for the same amount. And that is the conclusion of the demonstration for exercise 523.